In this video, we're going to break down the foundation of your stock portfolio and the way that you should approach your investments. I also include ETFs in your stock portfolio, which I'll break down in detail in the next lesson. I want to ask you a question. What do you do with the profits that you make from selling stocks? I want you to think about your stock portfolio as having two separate parts. At the core is your long-term passive investment strategy. The other half are your speculative investment strategies. For most people starting out, they don't know that there's a difference and assume that the only thing that you can do is speculative investing. What they're missing is how these two parts of your portfolio complement each other. Your speculative investments are relatively short-term trades that have a shorter time horizon. These include day trades or any other type of trading where you intend to exit the trade within a year. They carry a higher risk, but they can potentially give you a higher return in a shorter period of time. Growth stocks are assets that we generally expect to see increase in value over time. In finance terms, it's often referred to as your core principal. In general, you're intending to keep these stocks for a long time, and in most cases, you don't ever intend to actually sell them at all. And I'll tell you why in just a minute. By consistently putting our money into these on a regular basis, regardless of market behavior, you naturally flow through the lows, picking up shares at a bargain price, which in turn allows you to ride the highs even higher. Think of your growth stocks as a savings account that is able to compound over time. The purpose of your speculative investments are to supplement your growth investments. In other words, you take the profits from your speculative trades and reinvest them in your growth stocks. To be clear, our sector investor strategy is a growth investment strategy, which is why I tell everyone to start out by doing this first. Here's why this is important and what I want you to take away from this video. By putting these short-term profits into your long-term passive investments, you can potentially exponentially increase the value of your core principal. That being said, here's the reality of speculative investing. You will have losing days. 80% of traders lose money in speculative investing. This is why the core of our stock portfolio should be centered around our growth investments and not our speculative investments. For those of you that aren't interested in speculative investing, that's okay. It's not required. You can have just as much success growing your core principal by just executing a growth investment strategy. My Sector Investor course is entirely a growth stock strategy.